Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. I teach trading at Trading University. As always, we need to remind you trading is not for everybody. First market we'll take a look at will be the Australian US dollar. As we said last week, our focus needs to be on the trip down to 70 even or so. We think there's a lot of room below for this guy, so you're going to maintain current short positions or certainly look to resell into rallies. Basically, you're definitely in the sell the rally camp in the Australian dollar. Longer term, we see a cheaper currency here as a positive for the Australian economy. We think the Australian economy is still in pretty good shape. We think you have great demographics. You have good long-term things in place. And a sell-off into that 70 area of the chart, that's probably going to be a long-term opportunity for an investing standpoint. For right now, for shorter term, however, back to the daily chart, a lot of room below. Next market we'll take a look at will be the Swiss franc, the dollar Swiss. We like dollar Swiss. We've been saying that all along. We think right here you're really in a nice place from both an investor's and a trader's standpoint. Things are starting to come together. We really like buying a dip in here because from our perspective, our studies tell us that you have a really favorable risk reward in here. If you can buy this market, you don't have to risk it for much lower, meaning if you go long it, you place a sell stop below it. If they stop you out around that low, that's okay. You take a small loss, but on the other hand, you put yourself in a position to participate in potentially a pretty big move. So this is just a daily chart we're looking at. So we really like buying dips in here. We really like being long it right now. And you have a little bit of risk there, of course, but when you look at the long term, there it is. We think there's a whole lot of room on the upside. We think this guy goes to 1.2 or 120. So a lot of room on the upside for what we see is a pretty reasonable risk back on the daily chart, right? I mean, 120 is a long way off. You're currently you're not even at par, so that's just that'd be a massive move, and you don't have a whole lot of risk on the table right now. So that's going to be a fascinating one to watch. Next market, the dollar index. Dollar index, you can see it's been in a corrective mode, about 4 months or so, a little over 4 months. 4 or 5 months, that's about right for a correction. And we think once this correction has run its course that you're going to see some more upside too. And interesting to us, you're at that time of the year now where the dollar index broke out in earnest last year, and you're into July now. So here's another one where we really like the risk reward on this from both traders and an investor standpoint. Things kind of coming together for us. Here it is on the daily chart. From an investing standpoint, we don't think you have a lot to risk here. I guess from an investor standpoint, you'd be a buyer now or a buyer on any dip, and you want to risk that traded below 92 even. Likewise, from a trader's perspective, we like buying dips with an eye on the big picture here. When you see a weekly, a potential move now on the 104 level. So we think there's a lot of room up above still in the dollar and dollar Swiss. And back down to your daily chart there. Next market, the euro. I gotta say the euro has held up pretty good, all things considered. You have today, actually you have that big vote in Greece. A lot of indecision in the euro. You can see it's holding that trend line pretty good there. If I like the dollar index and like the dollar Swiss, I have to not like the euro. I mean, that's just how it goes, right? The euro makes up 60% of the dollar index. So if the dollar index, I think, is going higher, this guy's going to go lower. I think when you take out 110 here, critical level right there in the euro, you take out 110 and you could take it out pretty quickly too. You could take it out pretty quickly too with things happening in Greece and Europe right now. So when you do take out 110, I think that's going to open up the door to a test of par. Par's down here, 100, even money against the dollar. So I think that's where this guy's going to go. And I think he could probably go there sooner rather than later too. All it's going to take is a close below 110. So we think that there's a lot more downside here than there is upside for this 4-month correction that you're in now. We think that is a correction, and that's going to end in a quick trip down to par for the euro. Here's the gold market. We see gold as a leading indicator for sure, and we think it's very telling that gold made a lower low of the move this week. So Nothing's changed here. Lower low, that just reinforces the overall downtrend. Pop out to a weekly chart and you see clearly you're in a bear market here. If Europeans were concerned about weakness over there with the whole Greece situation and they ran into the gold market, boy, that's insult to injury right there. Gold remains weak. We see gold on its way to 1100, and when we think that you crack 1100, it's going to be a quick trip down to 900. So a lot of room down below for us in the gold. We see gold very definitely maintaining the bear market stance that it's in and it's been in. Last thing, we'll take a look at U.S. interest rates. The rally in rates took a little bit of a break this week. The U.S. unemployment number was a good number. It was above 200,000. You got to like that, but it wasn't quite as much as the markets wanted to see. Here is a weekly chart. Let me go to a daily chart. You saw U.S. interest rates back down a little bit there. There it is. They look to be consolidating. For our money, this looks to be a pretty big bull flag in interest rates, and we think that once you break out of that flag or so, that you're going to see U.S. 10-years make a move on 3%. So here's another one where, to us, we like selling rallies in the treasuries. We like buying dips in interest rates here. Quick recap, we think there's a lot more room on the downside in the Australian dollar, similar in the euro. On the flip side of that, more room up above in the dollar. You know, just because Wall Street's taking a break, a lot of the big money centers taking a break as people are lining up for vacations. That's a time where you still got to keep an eye on these things. All you got to do is look to last year when you saw the big breakouts in the currency markets coming in July and August. We think potentially see a repeat of that. Hey, thank you so much. My name is Jay Norris. I teach trading at Trading University, and we'll see you next time.